Thank you very much for coming out on a Saturday night to Walsall and finding it like I did. It was a challenge in itself, but lovely to be here. Big thanks to Andrew, to LSE, to Shard for putting this on tonight. I think it's really good to get out of London. Different crowd, very different crowd, good questions. I'm a bit worried about our Q&A coming up, but we'll see how we go. Keras Resources. So we claim, and we believe we are, AIM's only Australian gold miner, yet to find anyone else. This is only as of a couple of weeks ago, so it's all exciting times for us. And I'd like to tell you more about the gold, what we're up to, and touch on a few other things. So my lovely assistant Martin will help me out here. Brief overview. So just going through the history in case there's people here who don't know the history of Keras. We listed with iron and manganese projects in Africa. Iron ore's dead, long live the king. We realised that about a year ago and said we need a change in direction, or we can just wither on the vine and die. So we had a good look around, like Noricum, looking around for various projects, and we said, what is it that we want? And our key principles hadn't changed. We wanted low capital development, we wanted cash flow that was nearby, but we didn't want to be geographic or commodity specific. We said we'll have a look at anything as long as it makes sense, low cost, low capex, easy to production. So we went into Australian gold, which we'll go into a lot more detail with an experienced management team. I think the key takeaway here is probably the directors and management shareholding. We've been in it like many others who are here tonight. We're meeting for the first time for many years, and we've put money in it pretty well every raising, putting our money where our mouth is. And I think that's pretty important that management and board is as leveraged as any other shareholder, and suffers the slings and arrows along with everyone else. Martin, next one, thank you. So where are we? We've moved into Australian gold. I'd like to say we've achieved near-term cash flow. We've achieved timeframes of, I think it must be about 40 or 39 days now to first check coming through the door. Delivered our first gold onto the ROM pad. So that's pretty well done. But what we're doing now is, apart from bedding that down, is looking at where that takes us. So our strategy is to build on where we are at the moment, expand on the Australian gold side. We'll talk about that more and why we like Australian gold, and building this cash flow and looking at how we can best use that. Is that returning to shareholders? Is it investing in something that we believe has a lot bigger future and a lot greater value further down the track? Money's hard to find in these days, as we know, especially in the resource sector. So there's a lot of opportunities out there that when the cycle turns, to have something, that elephant in the cupboard would be lovely as well. Okay, so Australian gold. Why do we like Australian gold? Apart from not being a long flight away for the management team, it's at an all-time high. The other day when it poked towards 1800, it was back to where it was 5 years ago. And I don't think there's many commodities that you can talk about at the moment where they are trading pretty much at where they were 5 years ago, in Australian dollars. I do emphasise that. So we've got a robust pricing environment, but I think the single biggest factor that's surprised me as we started to look at this opportunity was the costs in Australia. So there's been a few things that have happened there. The Australian dollar has devalued, so that's the first benefit. But more importantly, the resources downturn has left this huge pool of labour and equipment that's underutilised. There's massive unemployment. I was reading the other day, Australian geologists, about 30% unemployed at the moment. Equipment, if you go out into Kalgoorlie down the back streets, there's just equipment parked up all down the streets. So your operating costs have dropped dramatically in Australian dollar terms over the past 3 years as the downturn has bitten. So you put the solid revenue with a lot lower costing, and we're seeing pretty well historic margin highs in Australian gold at the moment. So a really good place to be from that point of view. So what do we have down in Australia? 3 gold tributes. And we'll talk about tributes later, and I'll try and explain the dark arts of tributes. It's actually not that difficult. But we've got three tributes. The first one that we announced in November last year and that we're mining at currently is with a company called Norton Goldfields. Norton is a subsidiary of Lindsay Mining, which is one of the world's largest gold miners based out of China. That tribute is a 5-year tribute. So for 5 years, we've got the right to mine deposits on certain mining leases that Norton own in the Kalgoorlie region. There's 5.7 million tonnes at just under 2 grams defined in previous JORC resources on those tenements, and exploration targets in addition to that. The question why? Why would Norton, why would an active mining company, they are mining themselves on leases surrounding us, why would they give us the right to mine? Well, there's a couple of things. They've got a mill that's 3.5 million tonnes per annum, so it's a very large mill. It's been in operation for over 30 years. So there's been a lot of work done in the area, and to feed 3.5 million tonnes per annum, you need big deposits. So they're chasing big deposits to keep this monster fed. The guys who we bought the tribute off, Peter Hepburn-Brown, Peter George and others, Peter Hepburn-Brown worked for one of the previous companies that had that area about 20 years ago, back in the Centaur mining days, and he knew that there were a lot of small deposits that they weren't tackling. So he went to them and said, how about it? Why don't you let us have a crack? You're not going to do it. You don't have the time to go and chase these smaller deposits. You don't have the desire. So why don't we go in there and try and do a win-win? We'll pay you a decent amount of money through a royalty to let us access those deposits, and we can make a decent amount of cash on the way. So they signed up to that. It really is a win-win to both companies. The other major tribute is with Cal North. It's an ASX company, again predominantly Chinese owned. They bought these assets a while ago. They tried mining them back in 2013 for a few months. It went horribly wrong, and they've just sat on them since. Gold price going up, costs going down, and they've just sat there. I wouldn't say terrified, but the state of inaction. It was opportune to come along and say, look, this is what we're doing with Norton, why don't we do something similar with you? So we're able to sign that up, 4 million tonnes, 1.7 grams, 215,000 ounces in resource at Lindsay's, and we've got a small little deposit called Witchy Proof, which is near Paddington. So that forms the basis of what we have at the moment. What I'd like to do is spend a bit of time on a couple of the key deposits. You'll see, hopefully there's quite a few of you on Twitter, and you'll see some of the photos we're putting out. That's all small-scale open pits, and that's what we'll be targeting over the next 6 to 12 months. Some of these pits will last 3 months, some of them will last 2 weeks. So we're moving rapidly through them just to build cash flow and build some cash in the bank to target these undergrounds, because this is the backbone for us going forward for the next 3 to 5 years. So the jewel in the crown, Prince of Wales, probably should just call it Charlie or something like that, but Prince of Wales is a historic mine. It was started in the early 1900s with a lot of old workings, but really saw production kick off in sort of 1980s through to 1990. Then they had a significant rain event. And what had happened was there's a head frame for the shaft here. This is an old open pit. They cut back the open pit to near the head frame, had this big rain event. It washed out the footings to the head frame, and the head frame basically toppled into the pit. They took the insurance money and ran for the hills. So you had a fully operating mine back in 1992 that they basically abandoned due to acts of, call it God and stupidity. But if you have a look at what it is, in this top sort of 50, 100 metres, there's an old JORC resource of 154,000 tonnes at 8 grams. And then in this area below there, there's another 500,000 tonnes at at around 10 grams. 25 kilometres to that Norton Mill. This is a thin vein reef, so you've got to imagine this is about a metre wide on average, and you see some of the intercepts here, everything from 6 metres at 11 to half a metre at 126 grams a tonne, 50 grams a tonne over 0.4. So what you need to do is imagine that we still have to mine that at a metre, so you can get a broad-shouldered miner down in those stopes. But even so, at 0.4 at 126, that works out at 60 odd grams a tonne that you'd be pulling out of that area. So really high grade gold in this day and age. So what do we need to do to access that? Apart from building cache, to do this we need to dewater. So at the moment we've got water level probably about 70 metres down the shaft. We've dropped a GoPro down to have a look at the timbers and the shaft. It looks pretty good condition, but we need to dewater that. Now we need water for our open pit for dust suppression, so it works well. As we dewater it, we'll use that in the open pits, and then we need to follow that down, refurbish the shaft, re-equip, and then we can be back down here. And these stopes were active when this flooded, so there's broken stocks on the ground, and we can get really straight back into stoping within a month or two of re-accessing the bottom of the mine. So once we get down there, we can get steady state production. We're only looking at a small scale, 5,000 tonnes a month. Not exactly huge, 60,000 tonnes per annum, but at 10 grams a tonne, that's 20,000 ounces. And that's the key to it. High grade, high revenue, high margins, and that's where the cash comes from. If we look at our other main underground opportunity, Cal North, the Lindsay Mine, there's a lode under one of the old open pits called Parrot Feathers. This sits in part of the resource of 4 million tonnes at 1.7 grams. Within this is 500,000 tonnes at 3.3, but within that, at the higher grade areas, there's about 250,000 tonnes at just over 4 grams a tonne in resource there. It's a quartz vein, dipping in basalt. What we'll look at here is they've had a look at this previously, and they said, well, if we do it conventionally and we maximise the resource, we'll put a drive down into the footwall, waste drivage, and then we'll go into the ore body, we'll mine that out. But the amount of money you put into the capital development there is huge. So what we do as the tribute miner, we go in there and say, it's lovely that you've done all of this exploration work, glad we didn't have to pay for that. But we're just interested in cash. So how do we maximise cash? So what we're looking at doing is actually driving the incline down the ore body, so we get revenue out of it as we go. It does mean we sterilise some of that ore body because we need to leave rock around us to keep it safe, but that's not our primary concern. Our primary concern is maximising cash. So when you take that attitude, a little bit mercenary, but if you take that attitude, you can suddenly turn an ore body that's been sitting there doing nothing into a nice little cash cow. And that's what we aim to do there. We're looking at a few interesting things as well, like optical sorting, white quartz, black host rock. Pretty easy to differentiate, so instead of the old hand picking people on the belt, you use these optical sorters. That improves the grade, and what that means is your trucking costs and your milling costs, which you're doing through toll milling, are quite high. As long as you're only putting ore in there and not this surrounding waste, it improves your economics. So we're looking at all those sorts of things. So that's the Lindsay's mine. So what does that all mean? Year one. So initially we're looking at around sort of 15,000 ounces per annum coming out of these open pits. To step it up to that 20 to 30,000, we need Prince of Wales to kick in. When's Prince of Wales going to kick in? That's really dependent on when we feel we've got enough cash in the bank to commit to that. Early days, we're waiting for our first check. We need to see bed down that operation, and then we can kick that off. But certainly in 2017, we'd see that being in full production, delivering 15 to 20,000 ounces, 10,000 ounces coming out of Lindsay's, and then some of these other small open pits adding to that to get us to that target of 30 to 40,000 ounces for year two. All this equipment, we just dry hire. from people in Kalgoorlie. So the deals you can do now, we only pay per hour used. Normally they'll say you've got to pay 200 hours a month minimum to have a kit sitting there. We're paying leasing costs or bank costs to finance that. You don't need to do that now. So we can move around, we can park things up if we're waiting, and it doesn't cost us. So it's a great time to be out there in that regards. Talk about the local operation and team. We'll talk about the team to a bit, but more importantly, just trying to set the scene for Kalgoorlie. It's a little different from Walsall. At its peak, fascinating fact, 93 pubs. It's a true mining town out in the outback, but it's got every single service you'd ever want there. It's got assay labs, it's got mining contractors, it's got surveyors, that's where the School of Mines of Western Australia is housed. So it's got massive amounts of skill base sitting on your doorstep, which I think is one of the main benefits of operating in that area. Around it, and I should have stopped at the previous map, but around it there's mills. I mean, this area's been mined for over 100 years, and there's 5 main mills within 50 kilometres of Kalgoorlie. All bar one require additional feed to keep them full. Why they're happy to take additional feed is the more they put through, the lower their unit operating cost, and therefore their batch of ore makes more money, and they make a bit of money off yours. So again, it works well in toll milling. There's a lot of companies around there. If you look at some of the ASX gold companies, there's a lot of companies around there doing similar with toll milling. It's very normal. When we come to the operations team, we've got 3 mining engineers based in Perth, Peter George, Peter Hepburn Brown and myself. All got first class mine managers tickets for Western Australia, and that's our core skill. We are miners. We're not explorers. We pretend to know geology, but really we know 2 rocks, ore and waste. And that's what we do, and that's what we enjoy. So that's really the team. Okay, tribute mining. So what is it? In some ways, it's like Noricum. Noricum's got a 50-50 JV, and I think everyone sort of can come to grips with that. The Cal North Tribute is pretty much like that. So what we have happen is that if we get our revenue, so we've got an ounce of gold that we produce, we get $1,600 an ounce for that ounce. We then got our operating cost. In this case, let's assume it's $850 an ounce. We've got to pay, that gets paid off first. We then have to pay off the government royalty, 2.5%. That comes off. We as Keras then get paid a management fee, 10% of what's left as a management fee to incentivise us to maximise the profit instead of off the cost basis. We get that. The remainder is then split 49% us, 51% Cal North. So if you like, pretty much a 50-50 JV, except we're managing all the cash side and we've got the cash at risk. So that's the 50-50 profit share. With Norton, what we've got is a 22% royalty. So here, if you like, we would, instead of paying a 50% profit share, we'd be paying a 20% royalty, which in this case, or 22% royalty, in which case is, lo and behold, pretty close to $330 an ounce. So the 22% royalty and 50-50 profit share are pretty similar. And I think just to reinforce the points why we like tribute mining, the positives, and we will talk about the negatives, the positives, we haven't put money into exploration. Money and time we haven't put in. We just walk up their existing mining leases, existing resources, we come in, do the grade control, mine it out, off we go. What are the negatives? There's always a negative. The negative is we put in 100% of the effort but only get 50% of the reward. But I think that's a fair price to pay, seeing we're not putting in any of the capital to go with that, and that's why we do like tribute mining. I'll briefly touch on the leftovers from our African adventure, because Niagara and Togo is actually pretty exciting. I was there, I think it was earlier this week, I'm a bit lost where I am. And, you know, manganese, like iron ore, was in the doldrums the last couple of years. The last few months, it's been just phenomenal. It's the best performing metal out there by a long shot. It's back to where it was 4 years ago, and it's got us excited on manganese again. We need a mining permit. Togo operates on a different time frame from us, and that's fine, because at the moment we are fully committed to the gold, and we just don't have time even if we had the mining permit. Great discussions down there, see how we go, but if you have a look at published data, $3.60 a DMTU, which is a horrible unit, but we've published previously in our old feasibilities. I had a look today to check that I don't get in trouble with the NOMAD. We've published around $1.90 to $2 a DMTU as a cost, and that was when costs were higher. Gives you a feel for that. That's $60 to $80 a tonne margin on a 250,000 tonne per annum project, and gives you a feel what sort of cash that can spin off. As I said, that's parked. We need a permit, and we'll worry about that probably in 2017, to be honest, because we have so much to do on the gold side. We've got Gabon iron ore. I don't think we'll waste any time on that. I'd like to get into the Q&A. So, in summary, near-term cash flow. I actually changed that on the train. I was going to say generating cash flow, but we don't have that check yet. So near-term cash flow, or very near-term cash flow. Growth opportunities through expanding that gold base. Diversity with manganese, and I think that's something we've learnt, being beholden to one commodity or specific sector. I'm not sure I fully subscribe to, with the way volatility is in the world. And directors, we're loaded to the hilt with shares through a lot of our own money, so we're highly leveraged as well. So thanks for that, but question and answers time. Dave.
Dave, first off, as a long-term supporter...
Long-suffering shareholder, yes, but thank you for supporting me.
But I do just want to say thank you, I think on behalf of all of us, for your efforts as a team over the last 5 months. I think you've been phenomenal. That raises my first question. How long can you keep up that pace? What capacity do you have to grow that?
Yeah, look, we're going to need to bring on other people. Especially, I mean, everyone is working very long hours at the moment. We've got a very small team out there, and as the cash starts to come in, we will build that team. But we need to do what we're doing at the moment. Needs must. So, yeah, give us a few months, and we'll probably bring a couple of other people in to take the pressure off. So apart from me popping into Togo and whatnot, I'm the mine design engineer at the moment as well. So it's very hands-on, but it's good because you do know what's happening on the ground, literally. So yeah, it's a weakness, but we will address it in a few months as the cash flow comes in, and we get more stability.
Dave, I guess you're probably going to cover this 5 minutes from now, but are there any other morsels around Australia or the world in general of gold that you're pursuing?
Yeah, look, it's interesting, and without wanting to get ahead of ourselves, because we have a lot to do in this next 6 months to 12 months, we are always looking, especially around where we're operating. We've got a base there, why not? There's a couple of things that we really like, whether we're successful in them or not, who knows. We would like to add to Australian gold, very much, and that's our core focus. Why? We've been offered things. Now we're suddenly looking at cash flow. Lo and behold, people want to come and talk to you. It's a nice change after a couple of years in the wilderness. But there's a lot of West African gold mines, and with our West African experience, that sort of makes sense. But then you look at it and you say, well, the CFA in West Africa is pegged more to the euro. They haven't seen similar devaluation, haven't seen similar cost pressures ease. So is it a good place to operate for us compared to Australia? No. So we will stick as such to that Australian area for the foreseeable future.
Thanks.
Dave, I know you mentioned Togo, and it's been a long time, hasn't it? A long road. But obviously you went across there, and I think most of us didn't even realise you were going. What sort of prompted that to go across there? And have you got any timescale on the licence? Just like the emails I send you.
Yeah, I know. And just like the emails you get back, I will stonewall you. But so look, you have to be back there all the time, okay? Just to keep a presence there, especially because we're not really doing anything on the ground. We're not spending money on the ground. We've gone to the government and said, look, you know, apart from a couple in Russia that I know of, I think we're pretty well one of the longest mining permit sagas you can read about, and for not the largest deposit. So we go back every few months to have a chat, and it was quite interesting in that this visit, the feedback I had from our guys on the ground was they were quite nervous about it, and they'd seen what we're up to and how quickly we've moved on to Australian gold, and they're going, ooh, I wonder if they're going to leave because we haven't given it. So they were nervous, which is a nice result, I suppose, and that they are aware that there's other things in the world. And it was a positive meeting. I learnt long ago with Togo not to put a time frame on, and I won't put a time frame on, but I was happy with how things went.
How much control do you have over, with this tribute model, which I really like, how much control do you have over how that pans out? For example, the Norton tribute to me seems quite, although financially they get a similar amount of money, the fact that they take the first bite of the cherry out of the cash that they give you means that they're not carrying any risk.
Of course not.
Whereas obviously the 50-50 profit share guys carry an equal risk, if you like.
Yeah.
So do you get any control over what you end up with?
We have our licenses and we can go wherever we like in there. So we're obviously going to go to the least risk, highest margin areas. Having said that, we have a really good relationship with Norton. They've been extremely helpful. So, you know, instead of getting a diesel tanker out each day from Kalgoorlie, we use their fuel farm. That's not in the tribute, that's just Norton being good neighbours. We're always looking at areas with them, asking for more data or this or that, and they're helpful. They are certainly have challenges with feeding their mill, and as such they're very keen for us to succeed because we can help them a lot, especially with things like Prince of Wales. We had the managing director, a Chinese guy out there the other day, out at the old shaft, and he was saying, why aren't you digging now? I want that gold. And you're going, well, yeah, give us a bit of time, we'll be down there. But he was saying, so, you know, you're saying Q4 this year. I said, no, I didn't say Q4 this year. You said Q4 this year. But, you know, they're very keen for us to succeed because they're driven by ounces and they have a lot of challenges feeding that mill. So they're very helpful, and if we want to go somewhere, they will do whatever they can to help us to move to those areas.
So obviously the gold price moved around a fair
Yes.
bit. It's been up, it's been down, but it's reasonably healthy still.
Yeah.
You're expecting regular paychecks. How will that gold price be determined as you go forward?
So I had an interesting email from a shareholder today. So to explain it in a bit more detail, we, at say a pit, we dig, we do it generally by blast. We'll do a blast, we'll dig all of that ore out, put it on our run-of-mine pad, our ROM pad. Once that's closed off, well actually not even when it's closed off, in theory it's meant to be when it's closed off, but the trucks come in, the haulage trucks, the road trains from Paddington, take it away to Paddington's ROM pad. When we've hauled all of that blast in what we call a parcel, which must be at least 3,000 tonnes, we can say, that's the parcel, that's what we want you to sample, and on that date, that's the date of that invoice or that close off, the gold price, closing gold price at the Perth Mint that day is the gold price we receive. So we lock in the gold price pretty much in line with when we incurring the costs. So it covers us from that risk in gold price movement.
So you can hold them back for a few days then, just when you think the price is
Well, I had a chat with my FD about that the other day, and he says, just don't go there. Just, you know, you all think you know best, and it's going to go to 1,800, but what if it goes the other way? Fair enough.
You obviously said about Norton having issues filling the plant to process the ore. Are there any areas that they're looking at that are potentially not big enough for them to obviously mine out, that they could potentially come to you and offer you?
Potentially.
Is there something in the pipeline?
Potentially. No. Look, we're always talking to them, and it's in our interest and their interest to work together. So, sorry, Gordon.
Yeah, but recent literature said that Western Australia was the #1 place in the world for gold, and how much the Aussie gold price was so much far in advance to the pound and the American dollar. So how far going forward is that going to benefit us?
So I think there's a couple of points to take out of that. It was not only the #1 place as far as gold margins, it's the #1 place I saw recently from a mining investment. So that's regulatory, security, what have you. There are other areas that have benefited almost as much. Canada, seen similar devaluation, similar availability. But their gold mining is not nearly as large as Australia. South Africa, which has a large gold mining industry, has also benefited with the rand going down. However, it comes with its social and political issues, and that's why I think Australia does rule the crop in gold mining as we speak at the moment. And we talked about if you're in the States or any US dollar denominated or linked currency, it's a pretty tough place to be because the gold price is okay, but it has come down a hell of a lot in the last couple of years in US dollar terms as well. So that gives me hope as well, and that there's a lot of articles saying that with this turmoil going on in the financial markets, we should see gold definitely holding its own and hopefully approaching 1300 US, which is great as far as we're concerned.
With the near-term cash flow, on a worst-case scenario, with the Prince of Wales mine obviously needing the regeneration work, will the cash flow be enough to get the Prince of Wales mine up and
running? Yeah, absolutely. It's just a matter of time. So, and that's something that we're well aware of. If you look at, I'm trying to think what I've put out in the public domain. I can't say. This is a problem with jet lag. You're going to get me here tonight. But
release it tomorrow Australian time, and then you can all know.
No, but Prince of Wales, the amount we generate per month there is substantially more than we are generating currently. Let's put it that way. So we are desperately keen to get down there and get started. We do have a bookended period of 5 years, okay, from a legal documentation. We believe in our heart that will be extended as long as it's working well for everyone. But every month we wait, in theory, is another month off that 5 years we lose, making a hell of a lot of money. So, yeah, it's in the back of our mind that how do we accelerate getting in there, because that's the main prize.
Dave, you say you're desperately keen to get into the Prince of Wales for obvious reasons. Is there any plans going forward that we can actually get into maybe the London fund houses and see if we can accelerate that?
We always talk to everyone, Gordon, be it from Togo to Walsall to whatever, so we're always talking. One of the challenges we face is that we've had a hell of a lot of interest from New York, from London, from other places, from funds that offer streaming and other things that aren't dilutive to shareholders. That is a downfall of tribute mining. It's not our gold. And for streaming, you need to have your own gold to be able to pass that on to the streaming company. So that limits us in that regards, and that's why one of the things I've probably glossed over, we're also looking at our own operations. If we can acquire our own operations and get 100% reward for the 100% effort and have that gold available for alternative financing like streaming, it does help us enormously. So that is something we're also looking at on the side.
But also looking at the way the KRS is at the moment, we're still very attractive to an equivalent if we was on the ASX.
Yes.
We would be maybe, what in your, I won't put words in your mouth, what would you say that we would be worth if we was on ASX?
I can send you some comparatives,
Okay.
but it would be wrong for me to say what I think it should be worth, and I think you need to.
Well, we'd be a lot higher, wouldn't we? We'd be valued a lot higher. Everyone's turned up here.
Come on, God.
You can lead a horse to water. Sometimes you just can't make a drink, and that's tonight. Look,
What companies would you obviously see as
parallels? What parallels could you draw from what's the gentleman's saying at the back?
Yeah, look, valuations of Australian gold companies are certainly a lot higher than others, and that's because of the margin. It's as simple as that. The cash that those companies are churning out now is phenomenal. So that's what's driving it. So yes, valuations are higher down there. We also, if we look at our valuation at the moment, and we just look at the gold side, it's quite an easy comparison to do. And we've got to remember in the bottom drawer, we've got this manganese thing which you know, can put out a shed load of cash as well. So at those
Figure with that? Do you have a rough figure?
shed load. It's a technical term. Look it up. But yeah.
If you get to the point where you are self-funding,
Yeah.
can you foresee a time when you'll want to kiss AIM goodbye?
No.
Is that your aim?
Yes. No, why would we? I mean, I think AIM, it's a double-edged sword as everything is. There's no right and wrong in any of this. We believe, the only Australian gold miner listed on AIM. So that's a positive. In Australia, we'd be fighting with 20, 30 other companies to get our share of attention. So that's great. The negative, okay, the Australian market really gets the gold out there, understands it, whereas I think AIM has had a couple of awful experiences in the past with Australian gold. A few years ago there was one great disaster, and maybe that's put a few people off, and we need to rebuild the trust and why it is a good place to operate as long as you keep things simple. So no, we wouldn't move off AIM. Dual listing's a horrible thing. You've got compliance from 2, compliance from 1's enough of a headache. You don't want compliance from 2. You know, on ASX you've got quarterly reports, you've got audited half yearly, you've got a whole bunch of costs that come onto you. TSX, I've never done anything on the TSX, I wouldn't have a clue what to do, so steer clear of that. We're very happy with AIM, we like AIM.
With the Lindsay Mine, you've obviously said that it's a quartz mineralisation going into a salt dip. Would that obviously bring other elements into play? For instance, salt dip, obviously potassium, sodium.
Sorry, that might be my accent. So shallow dipping, quartz in basalt.
Quartz
in basalt. So
okay.
Totally about as inert
totally
as
different.
you can get.
Yeah, I was going to say,
So, yeah.
totally different.
We should have a translator up here. Maybe Alex, you can step in for the Northerners.
Yeah.
I was just going back to Togo again. I'm just wondering if there's any, just wondering if there's any risks associated with that license not being awarded at some point. Is there a timescale or anything that we need to be aware of?
No, there's no timescale. The permits, because we've got that mining permit application in, unless it were rejected, then yeah, that's a risk because it's gone. But no, because we've got that in and it's a governmental issue and we've done everything we need to do, no, there's no risk from that. It's a procedural issue which it's been complicated. I'd love to tell you all about it, and I can tell you all about it another day, hopefully when we get that licence. But it has been, I think, frustrating, not just for us and shareholders, but I think it's been a bit frustrating for the government of Togo as well. They would have liked us to be in production now. The infrastructure that's gone in Togo, the new ports, new roads, it's phenomenal. They're really doing a great job there, and World Bank, I think, just put in $20 million to help with the mining legislation in Togo. All of that will help in future years. Unfortunately, we have the situation, it's been a few years, but we hope, in the not too distant future that can resolve itself.
So, sorry, you indicated there that it's not all the government Togo's fault.
No, I'm saying that they are equally as frustrated.
How much are they asking for under the table?
No, never been asked. And never would be paid.
Dave,
You're going to have to put your hand up there.
if it's not the government, it's not Keras, what?
No, I didn't say it's not government. It's a procedure through government. I'm saying they're frustrated because of various things. And again, let's not labour on
Exactly.
the whys and
Sounds
wherefores
fun,
of
that.
Togo. That will come. I have no doubt about it. And as I said, even if it came tomorrow, okay, it'd be a great thing to announce. We know they've got that in the bag, but we couldn't do anything with it right now at the moment. We are so flat out just doing what we're doing in Kalgoorlie.
No, but it is more reputational.
Yeah.
At the end of the day, because it's been a noose around your neck for so long, just to get it out of the way.
It'd be great, no doubt about it. Love to have it, but that's why we moved on to Australian gold, because we said we could wait or we can get on and do something else, and that's what we're doing, and that's where the cash is coming from. And it will happen, but again, focus is on gold.
With the mining equipment that you've obviously got
Yeah.
on the pay per hour deal, is that an ongoing sort of long-term contract whilst you've got the tributes
Yeah,
in place?
I mean,
or is there scope to, obviously with the price of the gold rising, there might be other companies that want to start obviously producing
Yeah.
more product. So
If-
is that a sort of set deal for the term of the project?
Anyone who's got the time and inclination, pop out to Kalgoorlie and we'll show you the amount of kit that's parked up around there. It's phenomenal. There's on one of the pastoral leases near us, there's an old little pastoral airstrip, and lying down either side of that airstrip is yellow kit. 85 tonne, 100 tonne, 150 tonne trucks as far as you can see. It's just amazing. It's sad. Nickel's dead, iron ore's imploded. So it's really only gold that's happening in Western Australia, and one really high-grade copper mine. But everything else, every other commodity has suffered. And so all of those contractors that built up during that great boom time have now got this kit just lying around. Hopefully a lot of them have it paid off and it doesn't hurt them, but a lot have bank loans. They need to finance, they're just desperate to get that kit working.
Long term then, do you believe you're going to be a dividend payer?
As I said, we need to look at when we generate cash, what we do with it. Is it dividends, or is it look at the fact that we are in a cycle low with very low prices, and do we think it makes sense to put that cash into something which in 5 years' time could be worth a hell of a lot more? I'm pretty keen on dividends myself as a large shareholder, but having said that, I think we've got to look at the greater good and where we can really get true value from.
I was wondering about the recent RNS had a grade at 1.6 in Grants Patch, which was quite a lot higher, 16%. I think it worked out higher than you had previously announced it was going to be. Is that because you've chosen a choice part to start with, or are you finding grades higher?
Yeah, again, I got in a little trouble with the nomad the other day, so again, I've got to be careful what I say. But whether we should be announcing every batch that we do grade-wise, we need to have a think about. It's going to average out around that one. Those deposits are sort of 1.5 to 2 grams in that area. And we're going to get fluctuations. Depending where you're on the ore body, you might get a juicy 3 gram area, you might get a 1.2 gram area. So it will vary a lot. Of course we targeted better grade areas at the start. Anomaly 22, where we got the first area from, was pretty much where we expected. Where we are in a court at the moment, and watch the Twitter account, there'll be some lovely photos coming up of that. That's been a pleasant surprise. So yeah, it'll be swings and roundabouts. So.
The iron ore deposits, I mean,
Yeah.
I know they're sort of parked at the moment, but what are the plans, perhaps sale-wise, or just hold on to them?
Look, I'd love to be able to sell them, but realistically, who's going to buy them? If you can find me a buyer, fantastic. So we're working on things with that actively at the moment. It's not going to be a sale for cash in the bank. If anything, we can bring people in to help look at developing them in other ways, through other means. But again, that really is the lowest priority, and it's sort of like after a glass of red at night saying, if I've got a bit of time, let's throw out an email or two and see what we can do on that. It's really not a priority. It's the same one. No.
Great.
One last one. No, two.
I'll have the last one.
You'll have, okay, well, two. Tony and Andrew. Tony and Andrew.
I just want to touch on the issue of or the exercising of warrants.
Yeah.
And it's purely from my lack of understanding, so I just want to clarify something. You issued the loan note for
Yes.
£564,000. When they exercise these warrants, does that then mean that that money is coming to the company?
Yeah.
So you didn't take the 563 grand up front?
No, so what happened was with the loan note, we got £500,000 from the people who put the money in. They got warrants with that. They're now exercising that warrant. So if every warrant were exercised, we'd have £1 million from that. Well, we'd have another £500,000 come in. So we'd get £1 million off those people in total. And that comes to the company. Andrew.
You touched on Twitter just a few moments ago. I bought your share because of Gordon, who gave me a nudge sort of 6-7 weeks ago. But also, Alex is covering the story, and he tipped or he recommended you as a buy at spot 37. A lot of AIM companies, you know, they ignore Twitter, and yet probably the reason why 90% of the people here are because of the Twittering and what have you. And you should keep up that good work, because every time you see your brand, as I like to call it, you know, your pictures of the trucks going this way, that way, and even your train ticket, etc. You know,
That was exciting, wasn't it?
No, it's exciting. It's exciting enough for me to retweet. And the point being is, when you retweet, you're reaching out to thousands and thousands. So from that side, yeah, you can talk all serious, and you've got a great business. I'm grateful I'm investing. Well, keep up that work, because it's brand awareness.
No, I appreciate that. And look, that all came from a couple of late night beers with Alex and Gordon.
Yeah, I remember that around Westminster.
They were preaching. I said, "What's this Twitter thing? I've heard about it." You know,
Yeah, I remember that.
And whatever. And and look, every exchange has their area. We've got a thing called Hot Copper in Australia. You've obviously got LSE and other bulletin boards. But what I like about Twitter is it's a way to show things that are happening that are not RNSable.
Yeah.
You know, we can't put an RNS out saying here's a truck. I mean, stock exchange might get a little upset about it. But it does show you what's going on. Things are happening, and I think it brings it, you know, a lot more clarity around it. So I love it. I think it's
Well,
it's
the
great.
investors change from your boring grey suits. You know, private investors making money quick.
Yeah,
Want
well-
to see what you're doing. So your videos and your pictures, and coming here to Walsall, you know, fantastic. You made an effort, so you ought to be complimented on that. The gentleman said before, you've worked hard for 2 years. But I like what I see. So
Fantastic.
Keep all the work.
Excellent. I think on that note, there's some beers and wine and whatever people want to drink. There's some food outside. Thanks a lot, Dave. Thanks very much.